Stan Murphy is known best for perhaps his work inside the meat and wholesale foods industry, but before that he had an incredibly successful career within the dairy space. He has some what sound like perhaps interesting perspectives on business, but are profoundly insightful.
There's only two directions in business. You're either spiraling up or you're spiraling down. If you're spiraling down, it's incredibly difficult to stop, turn it round and start spiraling up.
After his first exit, and not quite knowing what to do with himself, Stan decided to make a move into a completely new industry.
The panel beaters was a good one. I was getting under my wife's feet and she said, go and do something. So brought a panel beaters, thought it would be a 3-year flip, doubled it in 2 years and had poor people trying to buy it off me without going to market. So
he has some helpful yet sobering advice for people that may be considering starting a business.
Look at what you're earning and then tell me where your skill set is best designed to start running a business. Taking 24-hour stress and 18-hour days to make it work and grow, are you prepared to do that?
He has many useful analogies to share about starting, growing and selling a business, but they're often wedded in some really interesting basic truths.
To me, focusing on the end game, that's, the last 3 meters of a marathon. What's the best place to start a marathon?
Stan Murphy, welcome to the show.
Good to be here.
What a pleasure. Hey, so you've done giant cookies in Belfast, you've done meat in Auckland, collision repairs in Takanini. So when you go to a party and someone asks you, so what do you do? Do you just kind of turn around and walk away, or do you look at them with a look of consternation on your face and say, it's complicated?
They will ask me what I'm doing and I say I'm running a meat company.
Got it.
And they'll generally follow that up, and depending on the environment, normally in more senior work environments, they go, oh, what are you qualified as? And I always tell them I'm a fitter turner machinist.
Yeah.
Base engineer that used to do maintenance.
It's a great place for us to start. So that you've told me that off camera, and our research identified that you qualified originally as a fitter turner.
Mm-hmm.
So firstly, what was it that made you go into a trade to start with? And then secondly, when did you realize that business was the right place for you?
Going into a trade was my parents drilling into me at 16, get a trade, get a trade, get a trade.
What part of New Zealand are you from?
Whakatāne.
Okay. Small town. Yeah. It's a great small town. Yeah.
Had already kind of dropped out of school.
Yeah.
Went straight into an apprenticeship, got qualified. 2 weeks after I qualified was in Canada.
Okay, well.
So bummed around the world for 5 years.
Mm-hmm.
Got Austrian qualified ski instructor and worked as a cowboy in Canada and a bunch of different things as you do.
Amazing. Did you use the fitter and turning skills that the qualification?
We used them since.
Never used them since qualification?
Mm.
Was there any discipline or habits or skills that gave you?
And if you look at any maintenance or engineering trade, what you develop is a problem-solving set of skills.
Mm.
And that's transferable to business, because business is, when I go into business, it's typically broken.
Yeah.
And it's finding the pivots that you need to drive performance back in.
Mm.
So businesses will always go, there's some fundamentals in business. There's only 2 doors in business. There's a front door and a back door, and you're going out of one of them. Yeah, it is that simple.
Tell me more.
It's also very similar to a casino.
Mm-hmm.
It's not your money until you walk out of the casino. So business is a gamble.
Is it?
The other aspect that people forget is there's only 2 directions in business. You're either spiraling up or you're spiraling down.
Hmm.
If you're spiraling down, it's incredibly difficult to stop, turn it round and start spiraling up. And that seems to be the skill set I have for some reason.
Mm. I'm going to unpack that with you because that's a fascinating bit of the conversation. I once saw Gary Vaynerchuk in LA, and the abiding thing that stuck with me from his talk is that he said that entrepreneurship is about solving problems. And so you mentioned that was the key thing that you brought and took through the rest of your life with you. Yet interestingly, off camera, you mentioned that you don't think of yourself as an entrepreneur.
Not.
How do you describe yourself?
I think my skill set's in business recovery.
Okay.
So do I want to go out and start a business from scratch, which is without a doubt the highest risk profile you can do in business? Come up with a product or service concept that's not in the market.
Yeah.
And then go out, sell, build, grow. That's an incredibly long time frame and very, very hard work. And comes back to a really interesting one. I love competition. Competition is the best thing in a market because it gives you a range of companies across a standard deviation. So we're a huge fan of a binomial standard distribution. You can look at it skewed and all the rest of the ways, but pick an industry, any industry, you can run a standard deviation curve over it. 10 to 12% of companies are going broke. 30% of companies are going backwards. 30% are going forwards, and 10 are doing incredibly well. As soon as you look at that across a range of industries, you realize opportunity is everywhere in existing industry streams.
Yeah.
Whether they're mature, growth, doesn't matter. There are opportunities everywhere. And that leads to opportunity paralysis. There's so much opportunity. It took me 2 years to actually step back and go, I'm looking at things and I've got to figure out how to identify the key attributes that I want. The panel beaters was a good one. I was getting under my wife's feet and she said, go and do something. So brought a panel beaters, thought it would be a 3-year flip, doubled it in 2 years and had poor people trying to buy it off me without going to market. So identified that if I held it another year, there was no additional benefit. So flipped it.
So a business turnaround specialist, and we'll fill in the gaps as we go about the experience through the dairy industry. But what, when you're evaluating a business, so you're looking to buy a probably distressed asset, what are the facets that you look for in that business that would determine it to be a thing that you can turn into a valuable asset?
Normally that it's broken and it's an identifiable break. The panel beaters was an interesting one. That was a bad family ownership model. And they had a grandfather who owned 80% of the company, taking 80% of the profits.
Hi, it's Josh. Thanks for listening to the show. When founders talk about the dream exit, they're really talking about freedom. Freedom to choose how to use their time and to decide what comes next. As a client of JB Ware in New Zealand, I know this is what sets them apart. They help entrepreneurs and leaders turn success into significance. A great exit isn't just about the commas in your bank account. It's about what those commas allow you to create. Two Commas is proudly partnered with JB Ware, helping founders by putting their wealth to work for generations.
The son was running it, receiving 20%, and the grandson was the shop floor foreman with no hope of getting anything for another 40 years.
Yeah, wow.
So, that's a simple idea. You look at it and go, okay, it's a broken family ownership model. When you evaluate the business, you can't evaluate it until you're into it. So you identify why it's broken. Then it's identifying the pivots that will make it profitable.
So to me, while you're thinking about that, I think about when one's going through business planning, I always, and this is, I think, the mistake that a lot of people make, is they jump straight into what is the business need. So when they think about strategy, they think about business orientation, markets that we're going to play in, where can we win, how we're going to resource for those things, and so on. I go back to what do the controlling shareholders want from the business? Because a business for profit is different from one for growth, is different for one that you're grooming for sale. They're all very different in terms of inputs and the effort that needs to be applied and the direction that you'll take. And then the next step is to go, what do we want to achieve from this thing? And consequently, what are we prepared to sacrifice? Because there's going to be some sacrifices, either returns along the way if we're growing, or time is probably the key one for most owner-operators to be able to go through. And then the next thing that I say is, what is the form of suffering that you are most able to endure? You mentioned business is hard. One of the ways that I think that business is hard is that it requires a lot from you. It's not an easy thing to do. I love it. You obviously love it.
If it was easy, everybody would do it.
Right, exactly. And or everybody would be doing it super well, and there wouldn't be distressed assets to buy.
Yeah.
And so understanding where you're going, what you want from the thing, and the version of suffering that you can handle, either, I don't know, if you're a company selling life insurance, for example, then that's a very consistent and kind of relentless sales model. You need to be out there having people prospecting, so leads coming into the funnel, good digital advertising, and you need to be prepared to go and visit people at their homes at the nights and on the weekends to sell them life insurance, and be prepared to continue just always having those conversations and always closing them. So you need to have a strong sales muscle and be prepared to deal with rejections. What did I hear once? Life insurance salespeople are trained not to hear the first 6 no's. They don't even hear them.
Probably just good Forex traders.
Possibly would, actually. Yeah, that's right. And so there's many different derivatives of that, but, work out the version of suffering you can endure. So in terms of your approach to things, let's go back a step, actually. So there was this really key bit of experience that you came back from your wonderful traveling life experience, and you had this qualification that you weren't interested in working in, being a fitter and turner engineer, and so you went into the dairy industry.
So yeah, I spent the summer surfing.
Yes.
As you do.
Mm-hmm.
My partner at the time got a job and said, you need to get a job.
Uh-huh.
So I went and picked up a role at the local dairy company, who had a history of employing tradesmen into operators because of the skill sets they brought into the business. So yeah, it was I was told to kind of thing.
Yes.
But yeah, it seems to have worked out well for me. Spent the first 9 months in the dairy industry working through the summer period, and then found out that they would send you to university 3 months over winter on full pay and accommodation and food, and you could go and study for a diploma in dairy technology.
Okay.
Or you could stay at work and polish stainless steel
For the same amount of money. Wow.
Yeah.
It's a no-brainer.
So I did that, came out of that with distinction. So during that period, I've always struggled with focus, and realised that God in His infinite wisdom made smart people and people like me, and so gave me the opportunity to compete just by putting in more effort.
Okay. So those are different things. You said smart people and then people like me? Yeah. Okay. Right.
I'm
smart.
not smart. Oh, I don't see it that way.
Okay.
I've worked with smart people when I was working with the Essentia teams, and they are definitely operating at a different level than I can.
Yeah.
But like I said, I can work harder. So, there's not many days I don't work 12 hours.
Yeah. So you did the dairy qualification, and then you stepped up through the ranks at the dairy business?
Yeah.
Was it, or was it Fonterra?
That was back then, Bay Milk.
Wow.
So the Rangitoki dairy plants down in Whakatāne, Te Puke and Potiki had just consolidated. I went from there into research and development and cream products. Was working as a international specialist in cream products out the back of that. Did a master's degree in technology management with a focus on e-com at the time. And we went right through to webmaster and web building. And that all stems from working on the floor in the dairy factory. It was a bit of one of those really good moments where you look around a room, it's a really noisy, wet environment. And I was looking at the guys that were 60 and I was in my late 20s. And I realized then that if that's me in 35 years, I should go home and ring a shop, the door and open a fresh packet of razor blades. Because then you'd be doing exactly the same thing for the next 30, 35 years.
So funny you say that. Sorry to interrupt your train of thought. I was facilitating a session with an executive team last week, and little breakout moments that you always have. What was your first job, and what did that job experience give you that you carry through to today? And the group was between 40 and 60, give or take, about 8 of them in total. And it was the usual mix of fast food, local supermarket, and our local engineering firm, kind of that mix of things. And every single one of them said the same thing, which was I was working with people that were in their 50s doing a job that I was doing. They were just one, maybe two levels above me. And it gave me the impetus to want to strive to do better so that I didn't end up in that situation. So it's really interesting. I had some similar kind of experience, I think, for a lot of us. I reckon that's one of the most valuable things that you take away, not just the money as a kid, but one of the most valuable things you take away is, that is actually a path. If I don't sort my shit out early on in my life, that may be the path that I end up on.
Yeah. Do I want to be doing this when I'm 60?
That's right.
About to retire.
Yeah. So you had that aha moment.
Yeah, without a doubt. So you kind of reflect a little bit at that time and realize that I had two options, either save a lot of money and invest wisely or invest in myself. So I started investing in myself. And that's the education drive I did for 10 years. With that, that gave me an incredible toolbox. And a lot of people, MBA is great. Master of Bugger All Marriage Breakup Association. And it all stems from the basis that MBA gives you nothing. But study and education has the ability to give a smart practitioner an incredible toolbox to draw from. And if you don't have that toolbox, you don't know what the tools are. So it does give you a huge opportunity to increase leverage and there's a great word, increase leverage, but get ahead of a lot of people because you know the tools to use.
Yeah.
And then when I was working with Accenture, I was able to pick up a lot of tools that augmented that toolbox.
Yes.
And allowed me to develop quite rapidly and gain a very different perspective in life.
Yeah.
So, yeah, it is a master of bugger all.
Yeah.
And I think in my year of the MBA, there were 56 students. I'd probably employ 3 of them. The rest I wouldn't worry about. So it's like anything. You're a tradesman is only as good as his tools.
Yeah.
If he has crappy tools, he's a crappy tradesman. If he has, the top-end Snap-on toolbox that's cost him $5,000 and he's a good tradesman, he's going to do wonderful things. If he's not a good tradesman, he's just going to have a flash toolbox. That's what an MBA is. It's only as good as a practitioner.
Yeah, I'll jump in there and add to that. Through my 20s, I made the same decision. And I was fortuitous enough at university to be given a copy of How to Win Friends and Influence People by Dale Carnegie.
Yeah.
And that was the first kind of growth book that I'd ever come across in my life. And this is back in the 1990s. And so the industry that is now growth is huge. It's a tens, if not hundreds of billions of dollars are spent on it now globally. In the 1990s, it was tiny. And I'd just come through university and I'd done this degree and I read this book. And I was reflecting on this the other day as I was driving down the road. I had an accident. An elderly woman pulled directly out of a side road in front of me. She'd come from her bridge club, which she had been drinking at, and she just pulled straight out in front of me, and I just crashed into the side of her. And I was a student in the last 3 or 4 months of my university degree. Someone runs out from a private home. It was like a physiotherapy practice, and he said, I saw what happened. She pulled out of the road. You're in the right to me. Here's my card if you need me to testify as a witness, no problems at all. She admitted responsibility in that moment. And then she went home and we had a couple of phone calls and she was saying, I don't want to claim through my insurance because I'll lose my no claims bonus. And I went back to the book and I used all of the things that I'd learned from the book around how to influence her and to do the right thing, essentially, which is what it was, and the reasons why it was okay to go through that process. And I can't remember what they were, but I'd learned those things from the book. And I'm like, holy shit, this stuff works. And so I spent the next 10 years going to courses locally, attending seminars, going to Australia to do things. And I spent, in now money, probably $70,000, $80,000 through the course of my 20s in extending my education into the things that I didn't know about, that I hadn't learned at university, that became helpful for me in life and in business. And the funny thing was, and I'm curious on your thoughts on this, is that through your 20s, if you've got a group of mates that come out of university, and you probably do, it all looks like you're tracking about the same. It's hard to determine who's going to end up on a different trajectory than others, because you're territory manager this, regional manager that, head of something or other, and that's what you are by about 25, 27 or so. And it was difficult to see who was going to kind of make the biggest mark through their 30s. And then by kind of 30, I'd started my first company, and most hadn't, a couple did. But then we started to markedly part. Like I'd been on this trajectory, but my income wasn't following it directly. It was the learning and the growth that I was going through on this angle here, and they were on this one here because they were going through the process of, working, drinking, partying, a little bit of travel, bit of working, and that was kind of the orientation of things. And so, over time, that trajectory hasn't changed, and so there's a massive difference, compounding interest and that sort of thing over time. So I think that the investing in your education and yourself in the ways that would be helpful for you, maybe doing an MBA, maybe doing growth, mindset, skills you can apply on the job, investing skills in my case as well, is just so invaluable when you are young. And people, I think, privilege income over learning when they're young, and they should flip it the other way and then go, it's better for me to focus on, if I can get both, an amazing learning environment where I'm paid incredibly well, do that. But if you can't, prioritize learning over income. What do you think about that, Stan? I think you're going to be on the same page as me.
I agree. I never paid for any of my education.
Oh, amazing. So no debt.
The dairy industry was really good. Like, wow. The flip of it, I think you need to go right back to the start, because there's a key component you missed at the beginning. And while you can sit there and watch your peers' growth over a period of time diminish as you go forward and yours accelerate, there's a decision point, pivot, where you've made an active decision, one, to invest in yourself, and two, you've created a goal. Now, whether or not you realize it, and this is something I've only picked up on myself, in the last 20 years, good. It's a long time. It's identifying that goal, and it's something that is missing in most business.
Yeah.
So if you can imagine a point, and we'll call it right now, when you were in your 30s starting your first business, you made a decision to, one, invest in yourself, and that goes forward through educational business. The second one is you created a goal for yourself. Now that goal is your strategic intent. That's where you want to be.
Yeah.
From the point you are to where you want to be, once you have a focus on that goal, you will take the straightest path towards it.
Yeah.
So one of the stories I use with people is, if I tell you to jump in a car and drive for 10 hours, where are you going to go? Doesn't matter. You can drive around the block. You can go left or right. You can go north or south. You just drive for 10 hours, turn up where you started. If I tell you to drive to Wellington and you jump in your car and you go, okay, well, actually, I might go to Whangarei first. And then I'll go to New Plymouth second, and then I'll go to Wellington.
I'd rather go to Wellington.
Yeah, I'd rather jump in a car and go to Wellington than I can do it in 7 hours without a stop. And that's the difference that goal creates, is that focus on the ability to make decisions that take you closer towards that goal, rather than making decisions that take you in the opposite direction. And that goal is what's missing in most business.
I agree.
So you have a huge number of New Zealand companies, lifestyle businesses.
Yeah.
I earn a wage, and it's a really good wage. I've got a batch and a boat, and I like my weekends, and I finish at 4 and start at 8, and that's great. If that's what you're after in life, that's perfect. That may have been your goal and you've achieved it. But in the same respect, when you have a business, if you don't have that goal, you're going around in circles. Growth is incredibly difficult. Scale is difficult. If you have that goal, then every decision you make will take you closer to that goal. That's the real key.
Yeah.
So when you look at your life journey, what you had at that moment was a goal that your peers didn't. So they kept traveling around in circles, and you started traveling in a different direction at a higher speed, because every decision you made took you closer to that goal. Yeah, it's a neat little way of looking at it.
Yeah, I really like that. My intention, my goal at that stage was financial independence. It was actually financial freedom. Yep. And it was a certain number of monthly income generated from my assets, not from me having to go and own a business and run a business. I knew that would be the path to get to that stage. So it was income generating assets was the goal, and so it was a very healthy number. And I've only talked to this really briefly. I made that such a driving intention for me that it actually was stopped being a goal and became my purpose to get financial freedom. And you go, well, that sounds cool, because achieving your purpose might be cool. But then I got there at 42, and I had a great life, great business, married, and I had this immense amount of income that was coming in that could fund a great lifestyle. And because it was my purpose, I'm then like, so what do I do now? I wasn't conscious about that until later when I looked back upon it and I realized that I was directionless because I'd achieved the thing that I thought that I was here to achieve. And that forced me to go through a real journey of going, actually, what am I truly here for? I've quoted this a few times, but Mark Twain, the two greatest days of a man's life are the day he is born and then the day he discovers why. And so, for me, the longest time, my purpose, the reason I was born was to achieve financial freedom for Josh. And then once I got there, it messed me up a little bit. And I had to go back to the drawing board and go, actually, it's not just about me, it's about we. And there's a greater purpose and, something that I can do. And this is a part of that. So that was my journey. But this is a show about you today, Stan, not about me. But I'm loving the backwards and forwards we're having. So you were progressing through the ranks at the dairy company at Fonterra. You'd done the MBA. You were then involved in a major restructure of the organisation.
So I was involved in two. I was involved in the dismantling of the dairy board.
Okay.
And the taking of those functions back to site.
So in the 90s, is that about right?
Yeah, sounds right.
Yeah.
Yeah, late 90s.
Yep.
And then was also involved in resetting the company direction. Well, I wasn't involved. I was involved as in dragged along with, I guess I was way too far down the chain. So there were a number of mergers and acquisitions that happened within the dairy industry around that time. Milk Products was absorbed by New Zealand Dairy Group. New Zealand Dairy Group continued to absorb a number of other small dairy companies, as did Kiwi Dairy. And then they merged into Fonterra, Global Dairy and then Fonterra. That process I was very fortunate to be involved with. One, with the dismemberment of the dairy board and the government entity that controlled all the sale of dairy products out of New Zealand, into Dairy Group merging a small R&D unit, highly specialised, into a very large dairy unit. And I think one of the best compliments I got out of the immense team building that came out of trying to merge 20 people into a 160-person team was one of the senior managers turned to me one day and said, "Stan, you don't operate outside of the box. You live outside of the box and occasionally go back into it," which was a huge compliment at the time. I'm not sure if it was meant that way, but hey. So I did some really interesting things that, I got a T-shirt for, and I changed the way some things were done in the dairy industry and achieved some really good results. So dairy companies in the US or Europe, 10 times the size.
Yep.
But their local market, like you take America, it's 360 million people.
Yeah.
You don't have to export. Yeah. So there's a big differentiation in the amount of product consumed in a market versus export. New Zealand's one of the largest dairy exporters because they export 95% of what we produce.
Yeah.
There's only 3 people and a dog in New Zealand.
Yes.
So you give them some dairy products, what are you going to do with the rest?
Yes, yes.
Same with beef and lamb, exactly the same problem. So 85% of red meat's exported.
Yes.
And that's just a reflection of your market size.
Yep.
So when people say market size doesn't matter, that's a huge contributor to how successful and how large you can be as a business.
Yeah.
Far less nowadays with the advent of the internet and e-com.
Yeah.
Yeah, it makes a big difference.
You bring up red meat. This is a perfect segue opportunity for us to go into your first business was JR Meats. Is that correct?
I brought JR Wholesale Meats as a turnaround.
Yeah. So you decided to leave the dairy business and go and focus on this, or did you do it as a side hustle?
No, I left the dairy industry and I went into a company called Goodpack, which is a Singaporean company.
Okay.
Which does intermediate bulk containers on a lease model like a chat pallet.
Right.
And just before Christmas, I thought, gee, I really would like to get back to New Zealand to see my folks. So applied for some jobs and came back to New Zealand to take an interview for a week. And that was supposedly doing M&A.
Okay. But decided to do the M&A yourself.
The businesses that the owner owned at that time was JR Wholesale.
Okay.
And NZ Deli, Whakatāne meats.
Yes.
I think I came back for Christmas, caught up with my folks, brilliant. Flew home, started end of January. Pointed out to his board of directors that they were trading while insolvent in the first months. At which point they gapped it pretty quick and spent the next 8 months turning the businesses around.
So you bought it?
I was then running it for the owner.
Okay, right.
There were a couple of really interesting moments during that. One is I was supposed to be doing M&A, so I employed a CFO.
Yes.
I said my weakest point in business is finance. I can do balance sheets, I can do P&Ls, but I don't do GLs. So employing a CFO gave me that ability to task someone into that should I need it and support me on the financial side.
So you were brought into this business to do some M&A, which is to go out and buy businesses on their behalf, but they were trading insolvent, so therefore they didn't even have any ability to meet the monthly bills that were coming in.
And this was 2008.
How are they going to do M&A?
You'd think.
There's something missing here, which is the money for the A. But
at the time, the owner kept telling me, there's loads of finance available. Don't worry about it. We'll worry about it once you buy something.
To me, I would have thought, how about putting some of that into this business then if it's all trading insolvent? So,
well, best to get your house in order before you go out and buy something else because your problems are just going to compound.
Yes.
Rapidly. But I managed to turn them around. I got them both back to EBIT positive.
What were some of the key motions that you put in place to get the turnaround to happen, as far as you recall?
There's no one aspect of business that you can put your finger on that says, this is the key thing I did that changed it. There's no part of a business I don't touch.
Yeah.
If I was to put my finger on it, I would say quality.
Okay.
So the value offering to customers wasn't where it should be.
Yep.
If I look at a price quality matrix, at that time JR was operating in the bottom quartile.
Okay.
You had a number of people above it, but not by far.
Yes.
And then you had a few companies, Neat Meat and Carb, at the very top end.
Yes.
What I identified was there was a huge gap in the middle.
Right.
Which is where I moved the company.
Yeah, got it. Yeah, I like that. Pausing on that for a second, we think time, quality, price being the other element, but that's kind of a services thing. So quality price matrix is such a super useful way to look at a business and identify whereabouts you're playing.
Look at an industry.
Yes, totally. So low bottom left, low price, low quality. It's the sprint to the bottom. That's kind of a joke in business because there's probably going to be someone else that can do it at a cheaper rate. Margins just become wafer thin, and so it's really difficult to do anything of interest nor leave a lot of money left behind at the end of the day.
I agree.
As well. And so and then the other thing is that you're shipping a product that is not something that makes you proud because it's low quality. So
and it's not profitable.
Yeah, exactly.
Yeah. So took the businesses back through to EBIT positive.
Yes.
The owner at that point had leveraged them both very heavily and was told by his bankers that he should return the debt to the family farm, and save $1 million in interest a year.
Okay.
At which point he offered me both or either. And I picked the simplest one, which was JR Wholesale Meats, because it was already well on the way with no length of period to take the next step. So raw meat. NZ Deli, which is small goods, which is funny because I now own Swiss Deli.
Yes.
NZ Deli was a longer turnaround, 12 to 18 months,
Right.
just because you got to get market traction.
Mm.
So it was understanding the mechanisms where you could instantly gain value.
Yes. So JR Wholesale, you'd been brought in to do the M&A, you did a turnaround instead on the business, so you'd improved the metrics, you were now in a profit-making territory. What was the valuation mechanism that you used, and how did the deal look for you to buy the business in the first place?
It was cheap.
It was cheap. Okay, right. Good.
No real assets.
Yes.
It was dirt cheap and financed by the vendor.
Yeah, okay, great. So you got vendor finance, so it's probably, I'm imagining, going from a loss into a small profit. And so you're talking, do you remember the multiple that was applied, or was it not a multiple at all?
It wouldn't have been a multiple at all.
Right, okay.
It was EBIT positive, but not by a lot at that stage.
Okay.
But it was already gaining traction. So, as I said before, businesses go two directions.
Yeah.
They spiral up or they spiral down.
Yes,
It was starting to spiral up,
yes.
and I was confident at that.
Yeah.
At that point, it would not take a considerable amount of time to drive it further, which we did. We sold out of JR 2014, and I think I'd grown it from 7 to 16 million revenue.
And revenue? Yeah, great.
Yes.
Okay, yep, amazing. That's not the end of that story, though, so we'll come back to that in a second, because there's more to the JR Meat story. So, question for you. You're able to buy a business that had been doing this, it had been going down, so the trend was down, and I love, you do as well, clearly, to be able to zoom back as far as I can, to be able to see the trends that are going on inside a business. And I don't love looking at a spreadsheet. What I love looking at is charts, a graph, a really effective analytics graph, because from that you can infer the insights, right? And insights are what drive your ability to make effective decisions about a business. So you'd gone from doing this, you'd arrested that slide and you'd pulled it up into this. So, looking at it, practically speaking, you'd probably say that it was going to improve over time, albeit that there wasn't a long trend of history there. To what extent do you reckon you got a good deal from the vendor, from the original owner at that time of the business, because you'd been working in it for a bit and you probably had a bit of mateship with him and you probably had a bit of respect from him?
It wasn't
No.
mateship
No. Okay.
by a long shot.
Did he just want rid of the asset, or?
He had to get rid of the asset.
Yeah. Okay. Yeah. Yeah.
So that's the time you buy things, is when they're distressed.
Yeah, I totally agree. And I'm dwelling on this for half a second because my audience is made up of around about 40-50% of founders, owners, entrepreneurs typically. And then the remaining group is people that have a desire to get into the space of being a business owner.
Yeah.
They might be in a corporate gig, or they might be in some form of leadership management kind of role. And so for those people, a very real path, because I think people conflate entrepreneurship with business ownership. And business ownership, there's many paths into it. You can hear it, you can take a part share, you can get ESOP, employee share options program, but you can also buy a business. And so you've talked about this distressed asset, it was going down. What do you reckon?
Can I stop you there, because I'd like to point something out. It's a story that's really relevant. One of my suppliers is mortgage-free, earns a very good six-figure salary, and was looking and evaluating at businesses constantly as the next step of what he should be achieving. I'm working for somebody else, I should be doing it for myself, I can make more money. And he would send me the businesses, I'd evaluate them quickly and, no. And he'd come up to the same conclusion. Eventually it was brilliant. After 6 months of doing this, I sat him down and said, look at where you are currently financially, look at what you're earning, and then tell me where your skill set is best designed to start running a business. Taking 24-hour stress and 18-hour days to make it work and grow, are you prepared to do that? At which point he kind of looked at it and I said, in reality, you should be buying a second house, invest that way. There's no additional stress. It's a capital asset. You're going to get a higher return on it. if you go into business, you've got to have a very strong skill set. We went through the skill set he has, and I said, yeah, you should go and do an MBA before you do it. At least then you've got a toolbox to draw on.
Yeah.
And without that, you don't have the guarantee you'll miss something. And you can rely on people to do things for you. A bunch of people have gone out the back door because they trust their accountant. And the accountants have done really well out of it. But at the end of the day, you've got to know exactly what they're doing, and you've got to put in mechanisms to control your business. So you better know all aspects of it. And business is common sense. Everything in business is common sense. And hindsight is, I could have done it. It's not a problem. It's easy. It's not. Common sense is the least common thing in business.
I agree.
There's only 3 functions in a business: accounts, operations, sales, and marketing. How hard can it be? But if we go back another step and we go, okay, I know where I am now. My strategic intent, my goal is exit. And I'm going to go as quickly as I can from this point to that point. Then how do I do that? How do I shape it? Do I have the skill set for it?
Yeah.
Where do I have to rely on other people? When I'm evaluating a business, does it have those skill sets? Can I bootstrap it or run a lean operation, which is, I typically run very lean operations. And can I cover those roles that aren't supported within the business? So even now I still do maintenance. So yes, I'm still a fitting turner regularly, and I know all my maintenance suppliers, and they know that they can't pull all over my eyes. They try. You figure it out pretty quick between you. I can run through accounts. I still do all the product development. I still do all the packaging development. I'm still driving sales in key areas and identifying targets and segments that we need to be operating in, differentiating customer base to give me more value, which is a real interesting one. So I came back into JR Wholesale in 2019 at the request of my old business partner that I sold to, and again turned it around, going into COVID with a food service company where we should have probably gone broke. But because of some very quick thinking on my part, I was able to position the company to take value out of the GFC, provide and solve problems for my suppliers, and get to a point where I was able to identify new market opportunities and then leverage those opportunities. So if we have a situation like COVID again, my customer base is more diversified. So, and now, of course, Foodstuffs has purchased JR.
Yeah. I'm going to weave together a couple of the things that you've mentioned there, because I think there's some really valid things to pause on for just a second. So you broke business down in its simplest form to kind of 3 different contexts. There's the money, the finance, kind of side of things. There's the operations. So, how do we kind of run the business? There's things that go on behind the scenes, the customer success, that kind of stuff. Manufacturing, et cetera, would slot into that space as well. And then there's sales marketing, which is where do we play, how do we win, and what's the rhythm that we go through to win customers. You then talked about, if I pull back in the MBA, and one of the anagrams that you mentioned was master of bloody anything, is that?
Master of bugger all.
Master of bugger all, thank you. But what I understand of the MBA is that it gives you the ability to know what each of those aspects of the business are and look at them in a way that will allow you to infer enough insight on what is going on inside the business. And what I'm hearing you say, Stan, and I agree with this to a certain extent, and I'll talk you through an alternative solution and get your view on this, is that as an owner of a company, it's incumbent upon you to have enough knowledge of what is going on across each of the different aspects of your business, because nobody else can have the view that you have, and nobody else has as much as risk as you have inside that venture. And so therefore you must kind of know, the things that are going on inside your business. Have I heard that correctly?
Yeah.
Okay. What have I missed?
It's more about understanding each of the aspects and ensuring that it's been done correctly rather than doing. So it's, I was talking about bootstrapping or lean operation where you run with minimal staff requirement and cover as many roles as you can. That's fine. You're bootstrapping it by not having the costs associated with R&D or any other aspects. But what you are doing is bootstrapping it to a point that it can go forward where it can afford that. And that's more around what I call exit strategy or that long-term goal. This is where I am. My strategic intent is business exit. And you build the architecture to get there. If you look at an owner getting too heavily involved, that will constrain a business.
Mm-hmm.
Yeah. And you said it perfectly before, and it's that zoom in, zoom out mentality. It's the ability to operate at helicopter level, to zoom in at any level and understand perfectly what's going on, where the problems are, what you need to solve, zooming out and then leaving it to people to manage. That's kind of the key.
Yeah.
If you go in and try to manage it as an owner, you become a small business because you get to a size where you are now going to kill yourself trying to control a bigger and bigger monster.
Yeah.
And it will kill you. And you have to at some point delegate authority. But you have to know that they're delegating authority appropriately and well. And that's that zoom in, zoom out. You zoom in when the need is there for you to realign people that are carrying out activities, and then zoom back and monitor.
Yeah.
If you don't know what to look for, you don't know. That's the biggest thing in business. If you don't know, you don't know.
So if I can ask, you sold 2014 JR Meats to your business partner at that point.
And so we had another company that was trying to purchase us.
Yes.
And they were unable to pull the funds together.
Okay.
And said they needed 3 to 6 months.
Yes.
We said, yeah. And I said to my business partner, that's great. We'll just charge them when they came back. He said, are you still interested in selling? And I said, yeah, of course I am. He goes, I'll buy it. And I went, sold.
Okay.
It's not your money till you walk out of the casino.
Yes.
Yeah, so I decided to walk out of the casino.
Yeah, fair enough. And what, if you don't mind me asking, had gone wrong, because there was a turnaround job that you had to do between then and 2019 when you were back to the business? Where had they lost their way?
So, as we were talking before, you've got to have that goal in business. And for me, that's always business exit. At which point do you sell it?
Right.
Exit isn't quite right in term. So what you reach in business is a point where you exit, or you reinvest and you understand it's another 3 to 5 year gig with substantial investment. If you're willing to make that, then you make that and pick exit as your milestone in the future again, because that will be another pivot point. Or at that point, you exit and say, I'm not prepared to put in the time, effort, money to go to the next level of operation, and you exit. When I left JR, it was a pumping business. So I love businessmen. You talk to them and they say, we're running at 100% capacity. And I sit there and go, wow, really? I said, and you go, well, you're working 24/7. And they go, no, 8 hours a day. And I said, well, you're working weekends. Oh, nah. So you're running at 20%, maybe, if you're lucky. Oh, no, we're 100%. That's not the way capacity works. You've got 24 hours, 7 days a week. If you're maxing that out, then, yeah, you're pushing the limits. At the original JR site, it was a backstreet building. We were running 2 shifts, 5 days a week. We had a team boning on Sundays. We were starting to max out the capabilities of that site. And I decided at that point the best option for me would be to exit. My business partner carried on with the business and decided to take that point as to look at how he can expand to the next level. he expanded to the next level and took on a very large site, built a greenfield butchery processing unit inside the building, chillers, freezers, production area, and then started getting into trouble.
Loaded up on debt through that process.
Loaded up on debt.
Yes.
And took on revenue that wasn't profitable. So he brought other companies in to process meat for them, and they had taken the line of driving costs down to the point where it wasn't profitable doing it.
Okay.
And when I came back, one of the first things I did was get rid of those companies.
Right. So he'd essentially outgrown what that business should have been in the business of doing, and it wasn't, he didn't have the objective view on that, and so you got back involved again. So what were the early changes that you made in 2019? And we didn't know that COVID was coming at that point, but you mentioned that you were well positioned for COVID, so what did you do?
Well positioned for COVID? No, well positioned at COVID, yes.
Got it.
So it's what you can do in a week. It was accumulation of a number of things. So when COVID hit and everybody basically went home and sat on the couch, we were a food provider to rest homes, hospitals. So we had to continue processing operations. At that time, I'd also been working for 10 months on how I could leverage the social aspects of employment. So on the day of COVID lockdown, we put through a 10% pay rise. We put through a social program with contribution to dental, doctors, lunches or morning tea on site, so biscuits and snacks alongside tea and coffee that's normally provided, which was a really nice thing to be able to do on that day. The 10% salary increase was actually funded by the government. So I had a number of process operators, and I was able to offer them apprenticeships, which they took up at a $5 an hour government subsidy and free training. So, if the government's giving away money, I'm going to be first in line. And if I can get the benefit of improving my staff's knowledge and level of operation, fantastic. And it was really unfortunate because we had 20 apprentice butchers on the book, and I built a support mechanism through our health and safety officer and our food safety officer, where 2 days a week they would go up to a room and help the guys go through their butchery modules and spoon feed them effectively to the point where you had to work hard not to achieve. So I'm from the old style apprenticeship programs, and I understand the benefit of it. And I was really excited to do that for the team. We had one butcher go right through. The rest of them, it became too difficult to spend 30 minutes at the end of the day with one of the two guys who would help them through each module. They had no interest in trying to do anything for themselves. And once the subsidy dropped, I went, well, there's no point me running a support program for this, because if you guys can't help yourself, I'm not going to pay guys to try and force it into you. But again, that was a nice thing to start COVID with from a staff perspective and a culture perspective. The second part was I rang up my suppliers, because you remember with COVID, there was a distance requirement between people. And I knew all of my suppliers would lose half their floor staff.
Got it.
So I rang up all my suppliers and said, I've got a bunch of people that are able to bone from carcass for you if you need that additional requirement.
Okay.
In doing that, I broke our team into 3 shifts. So we had a morning shift, an afternoon shift, and then a shift staying at home every week on pay, so that when they came, if one team went down, we could replace it straight away if they had a positive COVID. And we're very fortunate we were able to leapfrog through that way. And the day after I rang my suppliers, one supplier came back and basically filled us up one of my other key suppliers came back 4 days later, and I said, sorry, we're full.
Wow.
So we were able to pivot quite quickly.
Yeah, that's amazing. So in technical business speak terms and MBA terms, they would call that diversification of revenue across vertical integration. I think that's what they'd call that.
Yeah, but I'd go a little bit further because it's diversification of revenue under duress.
Yes.
So I figured that out in 2 days.
Yeah, that's remarkable.
None of my competitors did.
And so what kind of scale, because you sold the business to Foodstuffs in 25, just last year. November, okay, very recent. So what kind of scale was the business at? You sold it to your business partner in 2014 at 16 million of revenue. What kind of scale were you at now?
Revenue between 2014 and 19 went from 16, 18, 20, 19.
Yep.
So when I came back, it was 20 million was the year I came back. And when we exited, we were looking for 65, I think.
65 million?
Yeah. Revenue's vanity.
Yeah, totally. Yep, profit is sanity. Yes.
Cash is reality.
Cash flow is reality. Yep. That's a great expression. So how much meat is one selling at 65 million, 55 million of revenue? How much meat are you selling? 65 million. How much meat is that?
We're doing 20 to 25 tonne a day out the door.
A day? Well, that's remarkable. Okay. That's a lot of meat. 200 staff. 100 staff. Yeah, okay, wow. Okay, amazing.
2 shifts.
So deal was done in November. Talk us back through to when the conversations with Foodstuffs started and how they started and what the early days of that deal looked like.
I'll go back a little bit further. So
Sure.
I got cold called by a business agent called Jeremy Pack,
Yes.
who at that point was working for Link Business.
Mhm.
And I've dealt with Link sales managers a bit, and they're very capable salesmen. Yeah, that's the best way to put it. They're very capable. Jeremy gave me a cold call, and I don't do idiots well. I just really struggle with stupid. And Jeremy gave me a call and had a brief chat to him, and I get to the point pretty quick on those calls. He indicated that his history was with Fonterra. And it was around the time that I was exiting Fonterra, and I knew some of the deals that had been done, and he was heavily involved in those.
Right.
And I said, yeah, okay, come and have a chat with me and we'll see what we can figure out. Jeremy came in and saw me, and I went, okay, this is more dealing with the top end than capable. This is a different type of person. And having been through the process with Jeremy, I came to the realization that he's more on the merchant banker side than business sales.
Yeah.
We're a very talented guy. So that was the key to the start of the process. The reason I entertained the call in the first place is because in my head, I needed to exit or pivot.
Yeah.
So I knew I was coming to a decision point to take it to the next level would require investment and time. My attention span typically is 3 to 4 years max. I'd already been stuck in this for 5 years because of COVID. That killed us for 2.
Yep.
So it was an opportune time for that call. But yeah, the sales process and the outcomes, I think, comes down to the people involved around managing that process and the people at the front of it, end of it, understanding that they have no idea. I'm not an expert in everything. And when you go and find an expert, if they are an expert, there's huge value in it.
So you had the historic relationship with Jeremy back when he was at Link?
No, he's transferred. He now works for his own.
Okay, so
he's just out on his own capital.
Yeah, got it.
But he was at that point, he rang me in working for Link.
Yeah, got it.
So he's in the process of marketing Swiss Deli for us at the moment.
So did he call you with the intention of saying Foodstuffs is in the process of looking for a business like yours? No. Okay. Would you sell? What would it take to sell? Was that kind of conversation?
He rang me on a cold call looking for business.
Yes. Okay, great.
Yeah.
So talk me through how the Foodstuffs thing came into play.
I think like everything, it's part of the process that Jeremy ran. So he went out internationally and nationally we identified a number of players that had shown interest over the last 5 years, and he went out to all of those. A number of those came back with interest, sent out an IM, and then it was a process of going through identifying where the value was for each player, demonstrating that value, and then taking it forward. It's not a process that I can honestly say I could have achieved. There's no way in hell I could do what that guy does. Wish he could. My skill set's not there.
Yeah. So for Foodstuffs, the value for them, how would you articulate what it was beyond? Because I'd like to ask the multiple, if I may, that they paid, because it's a stellar number.
It wasn't a multiple sale. It was a share sale.
A share sale, okay.
And it was enterprise value.
Mm-hmm. Okay.
It's a different pricing mechanism.
Yes. How much of that can you share with us without breaching confidentiality? Okay.
It's only November.
Yeah, okay. It is very soon.
And I think, the business sales process is a business sales process. If you want to look at business as a topic, the sales process is the very last piece and is nothing more than a sales process. The business has to be in a position to be of value.
Yeah.
That's what people buy. And if you have built something that can't demonstrate that value, then you don't have a lot to sell at the end. Does that make better sense?
Well, that's
to me, focusing on the end game.
Yes.
That's, the last 3 meters of a marathon.
Yes.
What's the best place to start a marathon?
Yes.
3 feet from the finish line. Yeah. Unfortunately, you got to run the marathon.
Yeah. I don't think we've had this conversation, but essentially that's what I do. Not that last 3 feet of the marathon, but the thing that's the couple of years beforehand to go, what's going to be the best exit for you? Who is going to be the likely acquirer that would represent that exit most favourably, both in terms of what's the industry or company type that would see the most value from acquiring your business, and then how do we build towards that? So let's say there's 7 different things you have to optimise across the business. 3's I think oversimplified, but let's call it 7. Work out which of those levers, because in every business that I see, of those 7 levers that they've got to pull, give or take, it might be 5, it might be 9, depending on the complexity of the business. In every business, they'll be doing probably 30% of those things incredibly well. They'll be doing 20 to 30% of them averagely, and 30-40% of them they won't be doing at all. And so if they're important, we should be doing them. If they're not important, don't worry about it. Let's just optimize for the things that are important. So that piece there, I totally agree with you.
It's a piece most people don't understand, and that's why my gigs are typically I'm looking at 3 to 4 years.
Yes.
If I go into a business, my start point is understanding the exit. If I don't understand the exit, I don't start.
Yeah.
So it's a real important point in building that architecture to reach that goal. So the exit is pivotal. And like I said, it can be a pivot to growth in the next 5 years, or it can be, this is where I want to exit. But without building that architecture that you're talking about, most people go, I want to sell my company next month.
Yeah.
They don't realize it's a 3-year process.
Yeah.
So, and 3 years is depending on the value you want to create. I mean, I still carry in my wallet now a list of key business attributes that affect a business multiple on exit. So I still open it up and go through it. There's no part of a business that you can't or shouldn't touch, because you go back to a binomial distribution. When you sell a business, you want to be in the top 3%. To be in the top 3% means you have to be best in class in every aspect of your business, from top to bottom. If you're not, you will gain a lower value exit. To gain a higher value exit, you have to be best in field, best in class.
Yeah.
So, and that, sales and marketing, market share, product offering, customer diversification, product diversification, advertising campaigns. I built an online business during COVID. That's now a $3 million business in its own right within JR.
Yes.
Built the team around it, did the original web build, got it up and running. We do originally I was doing all the Facebook marketing, Google marketing, and again, bootstrapping until I get to a point and we get to a size that I can then bring in someone that can manage that aspect of it. You should put in a manager over the top of it with a team and then step right back. So it's that zoom in, zoom out philosophy.
Yes.
Get it up and running, get it to a point, prove it works. Then put in people, step back. If you do it the other way, which is let's build it, because, it's a better mousetrap, they're all going to buy it. You end up spending a hell of a lot of money, time and effort, and it doesn't function, survive, or create value, and you kill it. You should never have started. So you do it as cheap as you can at the front end.
Yeah.
And then when you're confident it can wash its face and contribute, then you step back, build the team, because it can handle the expense at that point, and drive forward from that point, zoom back out and look at the next aspect of your business that you need to focus.
You mentioned earlier in our conversation that you are not an entrepreneur. And is it that it's because the thing that you haven't done is go and start something from nothing in a space that the solution has not existed for that problem that you're solving for? Is that the reason why, or is there something different?
I think so.
You think so?
So to me, an entrepreneur is someone who is a founder. With a product idea, they build a concept, they identify funders, angel funding, they move to some form of commercialized product with minimal to no sales, but they're solving a real problem for people in the marketplace. They then go and get VC funding, and the VC funding gets poured in, and they have that exponential growth phase. That to me is entrepreneurship. Everything else is business.
Yeah, interesting. My view on that is that that's the difference between a startup, which is, to me, defined as finding a problem that others don't know exists, or that has not been solved properly yet, or has not been solved in the way that you are solving that problem.
That's an interesting one.
Yeah.
Because before we started, we were talking about Elon Musk.
Yeah.
And how Tesla wasn't entrepreneurial, it was business in the same kind of situation. All Musk did was identify a gap in the market. He ran a 4x4 price quality matrix. There are a bunch of cheap, crappy electric cars in the market.
It was.
All he did is says, hey, there's this glaring gap in the top.
Yes.
Let's go and do that. Did he invent the electric car? It's 1800s.
Yes. Yeah.
Did he come up with a new product? It's another electric car. Did he come up with a different quality offering to the consumer? Yes. That's the bit. He identified a gap in the market.
Yes.
Is that entrepreneurial?
Yes. Well, let me extend that.
Yeah.
So he's now got this Optimus robot. I think that's the name of the robot, which is the humanoid robot that you can see the videos of, that he's projecting will be available for purchase for $20,000. Elon is, I respect him as an entrepreneur, as a founder, as an inventor of industries. Certainly SpaceX is entrepreneurial as well.
Yeah.
Well, in fact, it might not be, because they just took over where NASA left off, and the spending wasn't going into NASA, and they set up this private space company.
Was it entrepreneurial? Was it exactly the same product offering in a different format?
I think, according to your theory, I think it's the latter.
Not saying that he's not an entrepreneur, but I think he is. But when you start looking at it, you start breaking it down.
Yes.
Incredibly smart guy. Yeah. Well on the spectrum.
Oh, yeah, very, very much so.
And being able to do things that most people wouldn't conceive of. So I've always classed luck as opportunity meets recognition.
Fairness, yes.
None of the key attributes that come out nowadays are new, but it's the people that tie those three things together: opportunity, recognition, identification, and action that are key. Elon Musk is fantastic at that.
Yes.
And I think that's where most of us success country. That's really controversial. I hadn't thought of it that way.
Yeah. Optimus will be interesting, the robot. That's definitely genuine entrepreneurship. Unless you were to go, Boston Robotics is the company that had the first kind of large humanoid that could run and walk and jump and flip and get pushed over and kind of stagger and then move. But they haven't.
There's a few Japanese firms out as well with good robot.
Different robots for different purposes. The Musk intention is that there is 1 billion of these robots around the world that are washing our dishes, cleaning our homes, pruning our hedges, doing all those sorts of things. Personally,
Keeping this company as we surf the internet, I have no social skills.
which is where society is rapidly going. Keeping the elderly company is a very good service to provide. But
Yeah, well, then we won't need dogs and cats.
yeah, that's right. Yes, better get out of the pet food
become
business.
the old lady with 20 robots.
Yes.
The old lady with 20 cats.
They'll be cleaner. Bigger power bill though.
What? Potentially. Solar. Tesla solar.
Yes. You talked earlier on about finding pivots.
Yeah.
If someone was looking at a business and they were thinking about what could be an opportunity to do differently with that business, let's say they owned a business and they're watching this and they go, this guy seems to have an interesting way of thinking. How would you think about finding a pivot inside a business?
Pivot in a business is an interesting one. So if you're looking at exit or pivot, so do I exit or do I expand, invest time, money? It's the wrong time to buy a business anyway, because that should be a business that's been working towards exit or pivot at that point. And at least the upper quartile, you'll be paying very high dollars for it. You have to ensure or be well aware of your skill set and how you can take it further. Accountants is a good example. They're great at making businesses go broke. Nobody will do it better. And I've seen it in the panel beating industry and recently brought Swiss deli from an accountant. Accountants are the only people I've seen that can take $30 million of revenue and turn it into zero in 40 years. That's a unique skill without understanding why. So I've lost my train of thought.
Pivots, looking for opportunities for pivots.
So in my mind, you don't want to buy a business at a pivot. You want to buy it at the back door. Yeah. So if you look at value creation, if I'm buying a business that's at a pivot or an exit point, then I have to have a very clear line to the next pivot exit point and a very clear understanding of how to take it there. Understanding that the value generation between a high valued business at the top of the scale and the industry stream, it has to go to the next top of the industry stream scale to make true value. Far easier to buy it for nothing and sell it for $1. When it's broken, there's a lot to fix. There's low-hanging fruit everywhere. So you can pick that low-hanging fruit very quickly and then focus on the rest of it over the next 2 years to drive it to the upper quartile, top 5%. And that's where you get your value. So the hype is always around new products, innovation, entrepreneurs doing that next great thing, the iPhone or join the iPresent with something else or however you want to go down that track. That's a very small subset.
Yeah.
It's a very small group of entrepreneurs that can achieve that. But there's a hell of a lot more opportunity in failing businesses. They're everywhere. Any industry, 10% are going broke. Doesn't matter where you look. It's a natural law, standard deviation curve. And once you get in there, then it's a Pareto rule, 80-20 rule. You can get 80% of the value in 20% of the time. That last 20% of the value will take 80% longer.
Yeah.
So you can do a hell of a lot very quickly. And in doing that, you identify where you need to be to get that last ounce of value and an exit or your next pivot.
Do you think about sectors that are ripe with opportunity that are under-tapped and not well run, or, there's not a lot of custodial thought.
Pick one.
Yeah, pick one. It's across every sector, as you reckon. Yep. So from...
Mature industry, obviously.
Yep, okay.
You've got larger incumbents. You've got declining sales, lack of innovation. How do you innovate in a meat company, for Christ's sake? It's been around for 100 and 200 years.
Yes.
But I can still find ways to innovate, either in process, product, packaging, placement. There's still opportunities, but you've just got to do it better than everybody else. Yeah. If you're going to do it the same as everybody else, what's the point? It's just another mousetrap that doesn't sell to. There's a million ways to kill a mouse. The old mousetrap that was invented hundreds of years ago, still probably the best seller.
It's funny. It's in my book, the mousetrap. So there is more patents that have been issued for the mousetrap than for any other product.
Yeah.
It's 4,492, I think, is the number. So a phenomenal amount. 7 of them earn the nearly all of the revenue, like 95% of the revenue. And the one that you're referring to, the Pennsylvania Springtrap, I think is the name that was allocated to it from recollection, occupies more than 50% of the revenue, which is that old classic spring, the little knob that we put the cheese or the peanut butter. Yep, exactly. They
Great
work.
Catching ducks.
Ducks. Okay, that's
We were kids. Rat traps and bread.
hilarious. Okay. So totally, I take and get your point.
It's no matter how you look at it, you can build it, they won't come.
Yeah.
And it's that simple when you go back to fundamentals.
Yeah.
Just because it's a better mousetrap, it kills mice.
And people need to be aware of the mousetrap. They need to believe that the mousetrap is not as effective as the new one enough is going to potentially be for them.
What is the new one?
Fair price. Let's do this better. Yeah, exactly. Yeah.
So would I pay more for it?
Why would you? Yeah.
A really interesting industry when you look at technology step change, which you've always got to be aware of, is the ice industry. You should have a look at that.
Ice industry. Okay.
And it's just base business. It's incredible. So originally ice was cut from lakes.
And shipped from the United States, continental United States, to Europe, where they had money. Yeah, fascinating.
Europe had ice as well. It was just a shipping to Europe.
Yes.
And you could buy glacial ice, which was high value ice. So a very differentiated market.
Yes.
You had high quality glacial ice that was high cost, and you had very low grade pond ice. That was far cheaper because it was pond water in the States or whatever. The industry had gone through process optimization. So sales and marketing differentiated product from high quality to low quality. They would optimize it by putting catches under the horses when they crap, so that less ice was spoiled or fouled.
Right.
They reduced the size of the sores. They would pour water onto the lake at night to freeze to get additional thickness and ice. And a really robust industry. And then some, muppet in the southern states came up with mechanical refrigeration. Now, at that point, there were a number of very large, very high-value ice companies that could have brought this guy and everything that he was about. And they all went, no, it'll never take off. Should have a look. There's some really neat, good books on it.
Okay, it sounds fascinating. I love a good industry or title recommendation, so I'll take a look at the ice industry. You heard it here first. Go out and buy an ice company now and innovate, because it seems like there's opportunities there.
But again, at the time, we're talking about now step change technology that changes industries.
Yeah.
But at the time, within the ice industry prior to that, there was 10% of companies doing incredibly well, 10% going broke.
Yes.
The other half were going backwards, the other half were going forwards. Mechanical refrigeration step changed the industry. And I don't know how much more of that is left in front of us that we'll see.
Yeah.
When we were talking with Elon and what he's doing, it's just rehashing a number of things that exist in a different format. The robot one will be technology-based. The technology in Tesla cars is outstanding. But it was a market gap that was identified.
Yeah.
Robotics, I think, is the same with humanoid robotics. But when you take away too many menial tasks, what happens to the population is going to be the interesting one.
Yes.
When you finally have everything married up and run by AI, and it decides you should dig a ditch somewhere, and it self-drives a truck, and then self-drives a digger, and then digs it out perfectly and drives it back. What does everybody else do? Oh, we won't have to do those tasks. We're still going to make money to buy all of it.
We do, yeah, to fund the system. I totally agree. That's for a different conversation. I hear you. Yeah.
It's, when you think strategically, you go, what's the end intent, and where does it finalise? So it's going to be kind of interesting.
It's an interesting 5 to 10 years ahead of us, Stan. So I've got a parting question for you, because we've covered a huge array of different bases, from your experience base, the way that you view an opportunity within a company, how to apply a bunch of tool sets to working within to improve that company. Very valuable lesson in how to take an asset which is not performing, how to identify an asset which is not performing, how to take it to a place that is performing, with the view constantly to annex it of some form. So thank you so much for sharing your experience and your wisdom in that space. My parting question for guests always is, there's an alternate universe, if you believe in the alternate universe theory, and if you do, then there is another Stan Murphy, which is in this alternate universe, and he has a different career than being a business turnaround guy, acquire, build, sell guy. He's a different guy. But that career makes him deeply happy. What's that career that other Stan Murphy has?
Probably a surfing
bum.
or a ski bum.
Okay, right.
Government-sponsored ski team or government-sponsored surf team.
Yeah, amazing. Yeah. I mean,
you get off somewhere and doing what he loves.
Okay, I mean, Red Bull have now created industries where you can make a pretty good living actually being a professional ski or surfing bum, as the case may be. So
as long as you don't have any accidents,
Yeah, I think that's a caveat that you're going to have to be prepared to do. I've got this thing on my arm because I fell out of a tree and broke my wrist and a couple of ribs, and not a pleasant experience, but I think about the injuries that I've heard Tony Hawk, for example. I know he's not a skier, but he's a skateboarder. And I did this rattled off this incredibly long list. Travis Pastrana, an amazing skateboarder, BMX rider, and rally driver. And it took him about 3 minutes to rattle off all the different things that he'd broken in his body. I'm like, the pain and the recuperation just wouldn't be worth it for me.
Yeah, and with the advent of social media and the driver now, and everything you see is bigger, harder, larger, more dangerous, which means the accidents are more career stopping.
Yeah, more consequential.
And I mean, that's a whole nother conversation. You look at what's coming across some of the social media feeds nowadays are akin to snuff movies. Some of the accidents, but it's a drive to get more and more attention, and people need to see more and more violence or more whatever.
Totally, more spectacular things.
Actually dedicate their time to.
That's right.
And it's driving this extremism in just about everything, really.
Yeah, I understand and agree. Stan, thank you so much for coming on the show today. I have really enjoyed our conversation because it's been so encompassing a range of different types of subjects that are of interest to me. We share some similar kind of perspectives on the world, plus also we've challenged each other on a couple of things. So I'm very grateful for you coming on the show today, Stan.
Brilliant. Thank you very much.
Great. Thank you. Amazing. Thanks for listening to the show. If you've enjoyed it, and if you've gotten this far, you definitely have, then I reckon you should go and check out a copy of my book. It's available on my website or Amazon.com. There's an Audible version as well. And it's a blend of personal insight and experience on what it takes to build and sell a company. It's not a how-to guide. You can go to ChatGPT for that. I've had some wonderful unsolicited feedback from people, but I did ask some folk for it, and here is one of the bits of feedback that has come from one of the early readers. Josh has created something rare, a guide that's both deeply practical and genuinely wise. His writing is punchy, clear, and feels like sitting across the table from someone who's been through it all and knows exactly what you need to hear. This is the resource every founder needs when facing the biggest decision of their professional life. Honest, actionable, and completely grounded in reality. That's from Susie McAlpine, who is herself a best-selling author and a speaker and business advisor. Please go check out a copy available on the website. Thanks for listening.